So what is change of character? Change of character is the order flow shift in the market. It's when the sellers take control of the majority of the positions in the market after previous dominance of the buyers, and vice versa. It could be a shift of buyers taking control of the market when previously the sellers were in control. So it's basically a point where a reversal occurs in simple terms. Let's get into it. So here's an example of change of character. So as you can see here, sellers been dominating the market for the majority of the time. And then you can see a shift. This was your change of character when buyers entered the market. Here, since buyers were dominating the market, you can see a shift where sellers entered the market. Sellers entered the market. The order flow continued bearish until what? Buyers entered the market again. And basically, change of character is just a shift. It's a shift where sellers would dominate a market and then buyers would dominate a market. Then once buyers are done dominating the market and sellers come in, huge sell orders from the institutions come in, and then sellers will start dominating the market. It's basically a tug of war. So in this lecture, I'm going to cover 3 types of changes of character. First, we're going to cover internal to internal change. Then we're going to cover external to external change. And then we're going to cover external to internal change. So internal to internal is when price is on a bullish trend, right? So price is on a bullish or bearish, vice versa. But in this example, we're using bullish. So as it's on a bullish trend, obviously this example would be a bearish reversal. So what we're doing is price still used the range extreme to go bullish, but instead of breaking structure here, instead of continuing and breaking structure here, it reversed in the internal other range extreme. So it reacted from the discount and came back to premium and reacted again. These are the range extremes. This would be your what? Premium. And this would be your discount. Based on what range? Based on this range. And price rejected from here, which means it wants to continue up, but then instead of breaking structure and continuing its movement and breaking structure to then later come back and continue the bullish trend, it rejected from here and came what? And came back and broke the previous swing, which is our rejection from our discount level and the range that formed the entire thing. So this would be your internal to internal. So then price broke, came back into the range, and continued lower. And this is your change of character. Here's a perfect example. Price was on its way up, came up, forced the range. This would be a range, but then price came up here. You would think, okay, this is perfect. Price is reacting from our discount level. That means price is going to continue higher, but instead of taking this liquidity and breaking structure, it rejected from our premium. The fact that it rejected from your premium and then came down and broke this structure and this structure, this means this is a change of character. So when price does come back in the range eventually, you know you're looking for a short. Why are you looking for a short? Because this is a change of character. Price went from buyers being dominating for a certain amount of time to now sellers entering the market and sell orders are coming in stronger and stronger. So let's look for a change of character. Okay, so what do we have here? We have a rejection from our extreme, which would be a rejection from our discount, and we have a rejection from our premium. Why are these our extremes? Because if you pull out your fib, this would be your extremes, right? This would be your discount, and this would be your premium. So you have a rejection from both of them. So what are you waiting for? You are waiting for a price to prove itself now, to break out of this range. And then if it comes back into the range, you are looking for a short. So that's when you go in your scalping bag and figure out an entry to go shorter. Why? Because you know the market is going to change character. Okay, completed. So the market now changed character. So now let's look for another one. Okay, what do we have here? Nothing yet. Okay, we have a rejection from here. Let's see where this goes. Okay, nothing yet. Okay. Price looks like it wants to react from here. Okay, rejected from here. And now it looks like it's rejecting from the other market extreme, which would be our what? Our discount. Why again? This would be our range extreme. This would be our range extreme, right? So now if price breaks to what side? Bullish. Why bullish? Because we were in a bearish trend. We're in a bearish trend. So what kind of reversal we want? We want a bullish reversal. Why? Because this would be a change of character. After sellers dominating the market for a certain amount of time, buyers come in. Buy orders come in. So let's see. Nothing yet. Okay, now we have a break. Now if price comes back into the range, what would you be looking for? Yup, a long. And price never came back. You could actually say that if you mark this entire area, this entire order block as your range extreme, price did come back and went bullish. So let's look at other types of changes of character. So what is the why behind the internal to internal shift? So as you can see here, price is on a bullish trend. And what do you have? Price been reacting from its extremes the entire time as it's going up. Why? Because buys come in. Buys come in. Why do buys come in here? Because it's obviously the best thing to do is to get into buys in the lowest part of your range. Your range is your market price. You have your discount, which would make sense to buy in discount for institutions, and at a premium, it would be best to sell because it's cheaper to sell here and it's better to buy here. Name of the game: buy low, sell high, right? So as the market reacts from your discount, which that means buys come in, but instead of breaking structure, it rejects from your premium. What does that mean? That means institutions came in and it makes sense for them right now to sell at a premium. So it rejects again and comes back here. So what happens here? We know that there's buy orders in here. Why? Because like we said, there's buy orders in discounted areas. So if price doesn't break structure, it doesn't have enough buying power here to break this structure right here and take this liquidity and continue higher. What does this mean? That means the sell orders here are coming in strong and they're starting to overpower the buyers in the market. So it's confirmed when it breaks. When it breaks, that means the buyers completely dominated the sellers in the market. So when price comes back into this range, we already know what happened in this range. What happened in this range? Sellers dominated, right? Sellers dominated this range. So when price does come back here, this is when we look for a sell to continue price lower because we had all the clues that showed us that sellers are about to dominate the market. So here is a double sweep, which would be your external to external character change, right? So here you have your the market was going bullish, and what happened? Instead of reacting from your discount right here, price broke structure, right? So as price broke structure, price continued above, you would expect a reaction from here, but no, price did not react from here. This is why I say never anticipate a change of character this early. Like let's say, oh, price broke structure here, so you're like, okay, this is a break of structure. That means price is going to come out from external to internal. This might have worked in 2019, 2020, but the markets changed tremendously too. So my advice is to wait, right? Always wait for the full-on character confirmation. So instead of reacting from the premium and reacting from the discount, price took this liquidity and took this liquidity, and there's no reason to get into why, because you know why. It's to trap traders and absorb liquidity. So price double swept both level extremes and took them out completely for then to change direction and break the structure and the initial range. When both of these ranges got broken, price comes back, once price comes back into the initial range or the range that previously had the sweep, preferably the initial range, you can start looking for a short, right? And here is an example. So price was on a bullish trend, started to slow down. Once it slowed down, if you're an advanced trader, you could have predicted that there might be a change coming. So this would obviously take some time. You might see this the previous day, and you can already anticipate that there might be a change of character the day before, right? So as you can see, price did want to react from the range extremes, but didn't. Gave you a slight reaction after stop hunting, then came down, took this level. So what would you wait for? You would wait for obviously the level extreme, but you can see the level extreme has already been tapped here. So you know it's more than likely to take the other end of the external. So absorb this liquidity, and then start the reversal. When is the reversal confirmed? Once this level is broken, obviously this level first and then this level. And then once price breaks this level and comes back into the range, you can start looking for a short somewhere here. You use your scalper method, or you can use a little bit of a macro time frame with a higher stop loss. Obviously you can use a hidden block, or you can use a gap that usually occurs as price skips through the initial range, and you look for a short because you know the trend is now confirmed, right? When is the trend confirmed? Once the break happens. So now you're waiting for a pullback, and you could even use your fib to try and get to a pullback above. So here you would use a pullback above your premium range, not your premium, your discount range, somewhere close to fair price. A lot of times it doesn't get to the fair price. So that's something you need to watch out for. So another thing you want to keep in mind when looking for an external to external change of character, it doesn't only have to be, let's say, price is on a bullish trend and then it takes out, the bearish side first, then comes up to take the bullish side and then breaks, comes down. It doesn't have to be only this way, obviously, right? It can also be taking the preferable side first, right? So let's say price is in a bullish trend, then it formed the inducement, broke structure to the up first, took the liquidity, then broke down structure, then took liquidity here, and then came back to the range, and then found rejection here to go lower, right? So it could be both ways. It doesn't have to be taking one side specifically first. Obviously, I prefer this side first, but it doesn't really happen that often in the market. Looking for this type of reversal, you'll mostly find it on higher time frames, right? So you will find this type of reversal where the opposite side gets plucked out first. It would be more for a 4-hour to a daily type of scenario. And you don't see that often, but it has a way better probability than the generic one, which would be take out the trap first and then take out the initial side, which would show that there was a lot of power in that hunt that forced the breakup structure. This one happens previously, but it's not as high of a percentage as this one. That's why I didn't include it in the diagram, right? So here we have the generic change of character that everyone teaches, right? So it's, you have a bearish trend and then you have a shift of structure, or whatever people call it, and price breaks above and comes back into internal. So this would be your external to internal, right? But, and here's an example, right? So you have your range. It was in a bearish order flow previously. Then you have your range right here. Then price takes out the external here to come back internal. This shows that price has intentions of going up, and it will use the internal liquidity, which would be your OB right here in range extremes, to push price forward, right? And in my opinion, this used to work perfectly back in the day, right? But right now, if you wanna take advantage of this in a high accuracy, right, I would say wait for that external liquidity that's been taken right here. You would want to wait for that to at least get wicked through or broken, right? For them price to come back into the range. So then when price comes back into the range, you could pull out your fib from right here, and get the range extreme here. It would be your discount, and then you can get in a trade somewhere here, right? Or once price come up and shows intention that it wants to go higher again, that's when you look for it. So you don't really look for you don't really confirm this change of character until this gets broken. And once this gets broken, now you're waiting for price to come back in the range, and then you look for your entry based on your range, or you're looking for a scalp to go lower to then take it higher, whichever way you want, right? So here we have a bearish trend, and price was in a bearish momentum, but here the high has been broken. That means this liquidity has been taken. So what does this mean? That means price is insinuating that it wants to go higher, right? And what a lot of people teach when it comes to character change is once price breaks structure, they wait for a pullback to a internal level, and once price start reacting from that internal level, they say that the character is changing, right? And this is more of a 2019, 2020, 2021 type of approach because the markets have changed, right? And in my opinion, best thing to do is, as you can see, price broke this level and price comes back. So once price finds this internal liquidity, which could be this OB or it could be the extreme OB right here, but this OB's been used, so in my opinion it'll be more than likely here. And the fact that this is correlating with the 50% range right here, right, somewhere in the 50% range, this will probably work in your favor, right? So once price reacts from this level, and we're not going to guesswork this, so once price reacts from this level, we're not going to just get in a buy or say, okay, the character has changed. We're going to wait for this level to be broken and price to prove itself. This would be something somewhat of your last point of resistance or your last point of support, right? So once price breaks this level right here, absorbs this liquidity, and then comes back into the range, now you can say, okay, a character has changed, and now you can start looking for an entry based on your range or wait for a stop hunt, right? You can wait for a stop hunt or you can wait for a setup to set up in your range and try and ride the momentum as if it's a continuation. So now price is back in the range. We're waiting for that peak to be broken. Okay, so now that peak has been broken. So now what are we waiting for? We're waiting for price to come back to its initial range, and we look for a setup, right? Our price came back into the range and stop hunted. So now you can say, okay, once price starts to pick up momentum, now you can say, okay, the character has changed. Okay, now we have a micro breakup structure. And the character has changed into a bullish order flow. Buyers came in the market. See if this continues. So as you can see, you witnessed your change. So the conclusion here is, as a trader, you should focus preferably on one change of character motion, right? Why? Because you're just a human, you're not a robot. And to focus on all three might be overwhelming. So preferably you should master one, right? My favorite and the one that I use most frequently is the internal to internal. That's the one that I find most success in these market conditions, right? And I always look to the left. I always look to the left and see which one is occurring more often, right? And implement that because the market's changed. We know about seasonal tendencies and everything. So it depends on the amount of volume that's injected into the market. So you always want to see which one is occurring more and use that. All right, guys, make sure you like, share, and subscribe. Follow me on Instagram. Make sure you join the free Telegram group. We always go over trades and weekly analysis and motivational quotes and everything. So, yeah, I'll see you guys next video.